Welcome to the 2023 Tri-Valley Market Recap, where we'll look back at what happened the last year in the Tri-Valley real estate market and give our predictions about what to expect in the real estate market in 2024. Hi everyone, I'm Jen with the Jenn Collins Group at Compass. The last year brought us a lot of dramatic headlines, warning about the threats of recession, global instability, interest rate hikes, tons of US political drama, and of course the prediction that the real estate market would crash in 2023. So, what really happened last year, and what do we expect to see in 2024? In this video, we're going to cut through all the noise and misinformation that we've been bombarded with over the last year, so you can know what really happened. Let's dive into our top 3 trends from 2023 first. The first trend we saw was rising interest rates. While mortgage rates did finally see a little relief at the end of 2023 after their peak in October, they had more than doubled throughout the year from where they were in 2022. Typically, you would expect rising interest rates to reduce buyer demand and draw housing prices lower, but that was not the case in the Tri-Valley this year. Which brings me to our second trend, increasing home prices. Overall in the Tri-Valley, we saw home prices increase by 11% from December 22 to December 2023. Danville, Alamo, and Dublin were the big winners with gains in excess of 20% year over year. Obviously, your specific neighborhood, the improvements in your home, and even when you sell your home can have a big impact on the price. So if you have specific questions about what your home may sell for, give us a call. Now, a lot of experts called for a crash in the real estate market in 2023, but that was not the case in our area. How can that be when interest rates more than doubled from the year before? There were 2 factors in play here. The first factor were cash buyers. Typically, cash buyers represent about 10% of the sales throughout the year. In 2023, cash buyers increased to 15% of the market. Plus, the second factor, which is also our third trend in 2023. Declining inventory. In the Tri-Valley, we had 2,321 homes sell throughout the year, which was down 38% from 2022 and down a whopping 68% from pre-COVID data. If homeowners didn't have a driving force to sell, they didn't. Many homeowners are still enjoying 3% interest rates on their mortgage, and they would need a very big reason to sell out of that mortgage to buy a new home with a 7+ interest rate, effectively doubling their monthly mortgage costs, not to mention higher taxes on a larger purchase price. Those that had to sell still did, but we saw many fewer homeowners selling just to move to a more suitable home nearby. What did they do instead? Renovated their current home. How many people do you know that worked on a renovation project this last year? We were one of them. While many buyers paused their home search when interest rates increased, the huge reduction of inventory and the increase in cash buyers really kept upward pressure on prices. Before we start talking about our predictions for 2024, if you like what you see here, click the subscribe button to receive notifications for other valuable East Bay related videos. And if you want to have a conversation about East Bay housing market, contact us here or by clicking on the link below. Okay, so what you've all been waiting for, our 2024 housing market predictions. Be sure to listen all the way to the end for our tip of the year coming up after prediction number 3. Prediction number 1, interest rates will be in the 5% range by the middle of the year. Why do we think rates will be lower this year? Well, the Feds have already announced potential rate cuts in 2024, which pushed mortgage rates lower at the end of 2023. Remember I said we saw the peak of interest rates at the end of October, and rates have mostly been improving since then. We'll look for this trend to continue, especially if the Feds do make the rate cuts they've announced in 2024, and this week's meeting will be our first indication. We'll monitor interest rates and report on their impact throughout the year, so be sure to keep watching. Prediction number 2, the Tri-Valley area will experience 5 to 8% home appreciation in 2024. Why do I think appreciation will be less than last year's 10% rate, despite a possibly lower interest rate environment? Again, typically, as we start to see lower interest rates, more buyers will likely come back into the market as mortgages become more affordable, which should in theory push prices higher. But there's a point where those sellers who are sitting on a 3% interest rate and who want to move finally will do so when the difference between what they're currently paying at 3% and what their new mortgage costs would be gets smaller. Clearly, they haven't wanted to move with 7% interest rates, but it's more likely they will as rates drop. Which brings me to our final prediction. Prediction number 3. Housing inventory will finally increase, so will buyer demand. Again, a lot of this comes back to interest rates. As we see interest rates fall, buyers should come back into the market, and homeowners may be more willing to sell and buy a new home that fits their needs better, if the spread between their current mortgage costs and a new mortgage isn't as dramatic. So, you've listened all the way to the end, and I promised a hot tip. Here it is. If you've been thinking about buying a home or investing in real estate, get started now. As buyers come off the fence in the coming months, you'll likely be competing with them. Whether that's solely on price or concessions, or both, you may find yourself losing out on homes you love. Obviously, the real estate crystal ball is often cloudy and hard to read, so we'll be interested to see how this year goes. There's a lot of unknown: an election year, global instability, stock market records for now, and the ongoing threat of inflation. So while we monitor all these things and their impact on the local real estate market, it's tough to predict month to month, much less the rest of the year. If you found this video valuable, please share it with someone else. And of course, if you're thinking about making changes in your real estate investments, whether your primary home or rental properties, we'd love to be your go-to resource. Feel free to reach out to us anytime at jen@jenncollins.com, and we'll see you next time.